What's up, YouTube? It's your boy Steve from Printer Gang Investments. I'm back with another video. And in today's video, in this video, the topic is gonna be macroeconomics is the key. Macro is the key. Because I've been getting a lot of comments from a lot of y'all asking, do I got a mentorship? Do I got a Discord? Can I teach this? Can I teach that? And I'm working on all that. And we're going to do all that. But, over here on Printer Gang Investments, free game come first. So, all that paid game shit, that comes second over here. We'll work on that later. We got to get y'all as much information for free as possible. So, I'm going to tell you the way I think, the reason I do what I do, and how I approach the stock market. And even though this is just a video, I'm telling you, the things I'm about to say in this video are the fundamental reason I do everything I do. And it overrides all my technical skills in these markets. So, as I was saying, macroeconomics is the key. The reason I say macroeconomics is the key is because the main thing that determines whether you get money in these markets or not is not going to be the chart. Unless you're a technical trader. Shout out to a lot of my ICT traders, my boy Patrick Wheeling, Tanja Trades, even Aristotle. I be seeing y'all putting that chart first, you know what I'm saying? And I ain't got nothing against it. I learned a lot, from ICT and a lot of chart people. But me personally, with my personal trading strategy, I put macro first. A lot of people don't talk about macroeconomics. I made a video about this before. Because me personally, I was making money in these markets way before I ever learned how to read what a candlestick was. Well, I knew what a candlestick was, but I was getting money in these markets, tens of thousands of dollars, before I ever learned how to use a stock chart. So that's not what matters. You see what I'm saying? So this is the way what most people miss. Most people understand the fundamentals of the company. Most people understand the balance sheets of the company. Most people understand that, well, not most people, because a lot of people buying profitable companies, but most people understand that some companies are profitable, some companies are unprofitable. But what most people slip on, even your favorite stock guru, because I never hear him talk about it, macroeconomics. Over here at Printer Gang Investments, the first and most important thing is what's going on in the world around us. That's what matters first. That's why y'all see me talking about AI. I've been talking about AI. And I've been buying AI stocks since ChatGPT dropped, because that's what's been going on. You see what I'm saying? So the first thing you got to do when you're trying to decide what stock to buy is, don't just pay attention to what's going up. There's nothing wrong with paying attention to what's going up. But what's more important is why are things going up? You see what I'm saying? So even right now, they're talking about these AI agents. Everything's about to get agentic out here. So I'm trying to see what stock's going to benefit from that. Like the main stocks I'm looking at, first and foremost, is stocks that got to do with AI agents, because that's what's going on in the real world. Then once we find a stock that's in the AI agent field, then we go look at the fundamentals of the company. Is the company profitable? Is the company unprofitable? How big is the company? Is it a big company? Is it a small company? Because that influences my decision. If it's a super big company, that's good and it's bad. Because, like, I'll give you an example. When ChatGPT first came out, if you search Google and you do research like I do, the main two stock picks they was telling everybody was Microsoft and Nvidia. That's why if you hear any influencer talking about, I'm the one called Nvidia, boy, that's cap. Nvidia was a test of anyone who watched these markets every day. If you watch the markets every day, that should have been a layup, a multi-100% layup. But anyway, okay, so me personally, I'm doing the research. They tell me Microsoft and Nvidia. Why did I go with Nvidia? Did I have a magic crystal ball? And did I know Nvidia was going to do 800, 900%? No. It's real simple. Microsoft's already a multi-trillion-dollar company. Trillion-dollar company. So, with that being said, okay, they saying they own 50% of ChatGPT, and that's cool and all. But the problem is the company's so big with buying a small startup, even if it's got this legendary technology, would that really benefit their balance sheet like that? Especially when a startup company usually loses money initially, because that's exactly what's happening with ChatGPT right now. And then they give us Nvidia. Now, big company, but medium-sized big company compared to like a Microsoft, and they make all the chips for ChatGPT. then they have no competition. See, all that's macroeconomics. Or, I mean, part of that's fundamentals of the company, but it's like looking at the story of the company. I might be using the wrong word, but it's all about looking at the story of the company. So, okay, now I like NVIDIA better than Microsoft. I like NVIDIA better than Microsoft at the time because, okay, here's a smaller company and they got a bigger grip on this situation than Microsoft. Microsoft's got the startup. They laying the groundwork. I get that. But NVIDIA's already profitable. If you've been in these markets as long as me, it's like NVIDIA's not a new stock to us. We've been trading NVIDIA. Like we was looking at NVIDIA the way people look at CrowdStrike and Salesforce now, like not Mag 7, but right under them type of stock. So they tell us NVIDIA, which is already profitable, which been getting money, makes all the chips for ChatGPT. I'm like, wow. They telling us this super safe investment. Not safe, but as safe as it's going to get for that level of mooning. It's finna go crazy. That's when you buy. That's how you come to a macro thesis. You see what I'm saying? So the way I would advise people to do it, first look at the world around you. Look at the trends in the world. People, I remember my favorite hater, he clowned me for looking on Wall Street Bets. I look on Wall Street Bets because people on Wall Street Bets pay attention to what's going on in the world. They the type of people where if we have a random political event overseas, or we have a random event with like a company like Boeing or something like that, if something happens in the real world, they're the type of people who will go to react to it and trade on it. Like I said, people always misconstrue sites like Wall Street Bets because the people on there like to do crazy things with their money as far as risk. But you got to read between the lines in these markets. The key is not how much money they risking. It's about why they're doing what they doing. The main reason is why. I swear I heard Josh Brown say it best. We keep it this simple. Why is the stock going up? And these days, in the AI era, you could literally just ask Perplexity, why is Palantir up? Why is Oklo up? Why is GEO down? Why is Google down? And it's gonna tell you. Like, as someone who, been trading stocks for years, way before AI, why, that is game changing. That is game changing, just that right there. So to all my beginners, anybody trying to learn, definitely start using these AI tools. Like, I ain't talking about like the agent building side I be talking about in my other videos. I'm talking about on the stock side. Like, get Perplexity. If you got the 20 a month, get Perplexity Pro. You feel me? Get you some ChatGPT. If you can afford that 20 a month, get that. If you can't, it's all good. But and I actually might be wrong because as of the time of this recording, Google just announced Gemini 2.0 like a week ago or something like that, and they saying it could do the same thing as Perplexity and it's free. So find you an AI tool, get to asking the AI tool why your stock is going up, why your stock is going down. Now, to fundamental analysis. Once we know what we want to do and why we want to do it, the next thing we need to figure out is what stocks is going to benefit, and then we go look at the balance sheets. A prime example of this right now is Oklo. Okay, macroeconomic wise, everything points to Oklo mooning. Like, Oklo's got a connection with Sam Altman. Oklo's in the nuclear energy space. If you know anything about AI and the nuclear energy space, nuclear energy is going to be necessary for AI. So we're looking for a nuclear energy company. We don't know much about nuclear energy because we normally don't trade those stocks because they haven't been mooning. But when they put your boy Steve from Printing Gang Investments on it, we figured something out. So we had a few stocks, like you've seen Patterson Energy and a few others. Some of them didn't work out. Oklo was that one. So why are we still not overweight Oklo if we know all that? Because the balance sheet on Oklo is garbage. It's not as bad as like the quantum situation, but they pre-revenue. They haven't got money yet. So if I put a bunch of money in the Oklo, if I go Oklo YOLO update out here, yeah, I could get rich. But it could go all the way left for real. You see what I'm saying? So we always check the fundamentals of the company, not to say I'm just not going to do it like a lot of people think. And that's what messed people up. That's why I was able to make money off GameStop too. Like, make money off AMC too. Because just because the fundamentals of the company are bad, if we got a good reason why the company's going up, we finna buy it anyway. We just probably gonna put less money in it. Because the way I see it is, The less safe a company is, the more chance I got of losing all my money. The more safe a company is, the less chance I got of losing all my money. That's why we ended up Palantir YOLO update. Because Palantir, in the heart of the 2022 correction, had billions of dollars in cash. There was no way they was going bankrupt. And if you looked at the story, they was growing their business. You know what I'm saying? And then AIP drops, the AI thing happens, and the rest is history. So it's about just weighing all the factors in. Like, okay, like with quantum, this is how we avoided being in a quantum disaster and made like almost $1,000 anyway. Okay, we found quantum. We had good reason to believe it was going to go up. Everybody's on quantum. Everybody's talking about quantum. I see the chatter. I see what's going on. I was already in IonQ. I've been looking at IonQ for over a year. So why do we get in quantum but only put a little bit of money in quantum? Because we read the balance sheet garbage. The bear saying it could go to zero. The bear saying that the technology might not take off for a very long time. So with all that being said, I'm still finna hop down now because I see the money. We got to be very careful with this one. And that's how we do it. You see what I'm saying? So first, we start with our macro, figure out what's going on. After we figure out what's going on, the next thing we do is look at the fundamentals. How profitable is the company? Is the company unprofitable? Is the company coming towards profitability? All those factors decide how much money you put in your stock, trade, investment, play, however you gonna do it. On top of, I almost lost my train of thought. On top of the story of the company itself. Like with Palantir, it wasn't just a balance sheet. Even before AI, they were making products that they didn't have competitors on. You know, it's a rumor that they're the ones dropped the location on Bin Laden. So it's like, okay. So I got a story. I got a good balance sheet. You see what I'm saying? And last but not least, and this is only for my people who want to take it there, because for anybody trying to learn, you can actually get money with just the first two I said. But if you want to get like more precise entries and, you know, do some of the things you seen me do on Printing Gang Investments, like when Palantir just fell to like 65, 64. If you know anything about my channel, we've been calling out that level. And I literally said on camera, if it ever hit this level, the screen gonna look ugly, but we gotta do it. And that's exactly what happened. And it moved from there. And it don't work out like that every time, because, you know, technical analysis isn't perfect. That's why we need macro analysis and fundamental analysis. But when you combine the three, things tend to work in your favor. So last but not least is your technical analysis. If you actually want to go learn some charts, you know, I learned a lot that I know from, you know, ICT. So, you know, I'm more of an ICT based technical trader, but there's no one way, right way, wrong way to do technical trading, because most of the ICT traders, I would say, better than me, because, you know, they can get the kind of gains I get and don't watch no news or nothing, so I can't do nothing but salute them. But at the same time, we be getting 2,000-3,000% a year. I don't know if they doing that. So, you know, it's a give and a take. But, you know, I like ICT. Smart money concepts. There's supply and demand. If I didn't go ICT, I'd probably go supply and demand. But there's plenty of ways to learn technical trading. I'm gonna show y'all like my technicals on this channel. But, you know, feel free to learn other technicals, because I've seen plenty of traders who don't trade ICT and make money hand over fist. Shout out Aristotle Investments. You know what I'm saying? Like, bro trades the complete opposite of me. Bro look at the chart first, then look at the fundamentals second. And I don't even think he watched the news, and he still get money. So there's plenty of ways to do this. You feel me? It's just about how you want to do it. You see what I'm saying? And what your risk tolerance is, how fast you want to make money, how fast you don't want to make money. Like, I always tell people, what y'all see me doing in the channel is like the middle of the range of the risk. Like, I'm not completely conservative and scared where I'm not finna do nothing but buy Coca-Cola stock. So there's like little to no chance I lose a significant amount of money. I'm not that scared, but I'm not finna get out here like a real Wall Street bets regard and just YOLO life savings and something. I'm kind of in the middle. So any gains you see me making, and a lot of y'all probably already know, because a lot of y'all probably done took trades y'all seen me take way more money than y'all seen me put on them. But whatever y'all see me do would be like the middle of the risk range. You could definitely get way more money than you see me getting, or way less, depending on how you want to do it. I always tell people the stock market can do whatever you want for you. You could take $1,000 and you could set it up where you don't make but $1 a year, and it's guaranteed that you could do it where you change your life or lose all your money today. It's all about what your risk tolerance is, what you're trying to do, what your investments goals is. So, it's your boy Steve from Printing Gang Investments. I was just trying to give y'all a little talk. We talking about macro analysis, you know what I'm saying? And I'm going to be doing a lot more videos, trying to get some more, video lessons. Like, people asking me, make mentorship, make Discord. We're going to do all that. We're going to do that. But the free game come first, you feel me? So, it's your boy Steve from Printing Gang Investments. I'm going to see you in the next video.